Hello guys, welcome back to a new video. And today's video, I want to give you guys the usual weekly market breakdown. Also going to look at the market from a technical and a fundamental perspective. If you're new here, I welcome you to the channel. Please head over to the educational section to go over some of the educational content that I have provided in the past that will help you understand some of the fundamental wording that I will be using here today as well. Now guys, let's try and get this video to about 100 likes. You guys know I don't have any sponsors that I do run on the video, so a like on the channel would be highly appreciated just to help the channel as well. And if you enjoy the content, please do consider smashing that thumbs up button as well. A lot of people has been emailing me asking me about the passing of the funded accounts. As you guys can see, I've been quite busy passing accounts. I actually thought I passed 49 accounts. Here you can see I received 32 accounts and I passed 32 accounts. Anybody whose account that I have passed, more than welcome to to leave their comment over here just to speak about the experience of the services that they've received. Alternatively, the group will basically be where we're updating guys in terms of the pricing of the accounts that I pass, the what accounts I pass, which prop firms, all of that stuff. It's going to be a group to utilize and just answer a lot of the gray areas, just to give you guys more clearer perspective there as well. Now, without any further ado, let's jump straight into the data. Firstly, we have to speak about what we know at the moment. We had the core PPI that came through. So we had the core PPI. And we had the PPI and the core retail sales. So PPI, the producing purchasing index, if I'm correct. Well, I think I should be correct. But we had that data that was released this week. Now, with data looking this bad, it's obviously makes a lot of sense, in terms of which way we see the dollar currently moving. As you can see here, we are slowly starting to see declines in the PPI, the CPI, the PMI, as well as the retail sales are coming through negative as well. Because of the good CPI data, consumers are getting a much better relief. But this data, with the PPI being low, this now puts the Feds under more pressure to actually continue hiking those rates and hitting all of those US consumers into further debt. That's why you have to get a funded account so that you can get the capital to start trading and make some good profits as well. Now, here's an article from Daily FX. It says here, US breakdown news, PPI and retail sales missed to the downside. Now, if you ask me, I feel like it's always rally, fall, like a bull run and then a bear run. Like, that's kind of the thing I'm sensing for the dollar index here, because you have this bullish run for a year, and then like if you're here, was a whole 12 months here, so you can go there, we had a bullish run, and then as we go into the new year, as you go into the new, you see the dollar is starting to correct now. And you remember when the market was sitting at this level, I explained all of the reasons why I wanted to see the market come back to pre-pandemic levels of a year, because in March 2020 is where the market started seeing bullish signs. Actually March last year, because that's when the Fed started hiking those interest rates. The bear run we saw before that was due to COVID, because the Feds had to lower interest rates to zero to encourage consumers to spend more money, but consumers were all locked up in the houses, and then as soon as they came out, they were like wild animals, and we probably know that. You have to be smart in this country to understand how they trap you. It's like Black Friday that doesn't exist. In any case, now without any further ado, let's continue with the article that says here, lower CPI adds further pressure onto the Feds to pause rate hikes. Now, the Fed never said firstly that they wanted to lower the interest rate hike, right? And I don't think they should make a statement like that. But in any case, this is the news that says here, US PPI dropped more than expected. That's why you should never have any expectations, in December, as the end consumer breathed a sigh of relief due to lower CPI, as we saw as well. There was more good news to come from the data in the form of revision of the November figure, which corrected a supposed monthly price increase of 0.3 to 0.3 to 0.2 increase. And you always think increase 0.3 to 0. Like, how do you increase but you come? But this is how economics work. So this in what becomes a long line of inflation, mainly CPI prints, like I said now. And then the story goes on. Okay, it says here, disappointing retail sales suggest a challenging trading environment for 2023. It says here, at the start of earnings season of Q4, major US banks increase cash reserves. Yes, that's what they do, in anticipation of a pickup in credit losses due to challenging, because they know what's coming, right? In the economic environment, it appears that the December was challenging for consumers, resulting in a retail sales declining 1.1%. CPI comes down because people, not spending as much. It makes sense for the retail sales to come with that as well. The only problem we have is that here in South Africa, the repo rate is expected to continue increasing until the end of the year. Eskom is about to hike tariffs with 0.19%. I think it's 0.19 or 19%. I know it's 4 times the amount in what they raise people's salaries with. Well, that's if you ever got a salary increase, except for your boss, because they always get one. So it says here, the drop was led by large declines from gasoline stations, motor vehicle, and parts dealers, as well as non-store retailers. Gas prices have been in decline for months, which was always good to see. But the thing is, I always feel, I'm going to close this, right? Before I close it, I just want to check the heat map. Okay, so they just talk about the market reaction on there. So we're going to go talk about something very quickly. You see, this is how the economy works, okay? As soon as you think you're doing good in one thing, you have the next thing coming through. So what do I mean by that? So in South Africa, for instance, and I think this is a problem across the world, is that as soon as you get supported in one aspect of life, the next thing comes as like it's like a take profit in stop loss. So if you think about it this way, right? As soon as you get good fuel prices, you have load shedding and you have an increase in tariffs, meaning you'll pay more for electricity. Then if that one comes down, then you have this one going up. But what we have in South Africa is, and people are not taking note of this, but we have high prices for electricity. Yes, you've got low prices for fuel. We have a continuous increase in repo rates, meaning you're spending more money on debt because all your bank is saying, we just want to let you know that your car repayment is going to increase. And you're like, but I didn't. Yeah, it's fine. But I took it in 2020 when interest was low. Well, that's how we got you, because you were stupid. You took it because you saw low interest rates. And the thing is, you'll always notice how the negative debt will always exceed, or not the debt, but the negative will always exceed the positive, because the only positive thing that we have in South Africa is the low petrol prices. Everything else is bad, is not worth talking about. But the only reason why we've got low petrol prices is because of the overall price of fuel that's going down and the price of the dollar index declining, because oil is priced in dollars. So if the dollar drops in value, it means that we pay less for fuel. Although when the fuel gets here, you still pay a lot more. So the quickest way to calculate whether fuel are going to increase or not for the following month is to get the price of Brent oil, because Brent oil is priced in dollars per barrel. If the price of the dollar index drops, and that means that the rand then gets stronger with the dollar, it means that we used to pay less for a barrel of oil, whether it increases or decreases. But the best thing that can happen is you got low fuel prices and you got a lower dollar. But the time the oil gets here, or the petrol gets to South Africa, people are like, we should sell it to you for 10 rand, but we don't like you, so we're going to give it to you for 15 or 19 rand. And we're also going to hike your interest rates. We're going to cut your power 4, 5, 6 hours for the day, and we're going to increase the interest that you pay on your debt. And you said that you're like, but what am I going to have left for the end of the day? So that's where we are now. Guys, if you want my advice, it's tough out there. Yeah, it's just tough out there, and it's important that, if whoever can help, help wherever you can, do whatever you need to help your fellow friends and family. But in any case, let's get to the data. So we're going to start with the dollar index. So if you remember, I said that the dollar index, I was on the weekly time frame, and I said we can expect the dollar index to dip lower to go and test that previous level of support. Now, this is exactly where the market had gone now, so it's a very good time to make an update. We do expect a slight correction and then a potential continuation to the downside, as we expect further data to come through next week. However, on the daily time frame, we can see that the dollar is currently trading sideways. However, what we can see over here is we got a market that broken below this strong level of support. Now, the market broke below support and it never came back to test it as resistance. I do expect, the dollar to still continue slightly higher. Now, if you go on lower time frames, you'll see we had a massive liquidity run here to the downside over here. This was the people that are like, yeah, I'm trading support. I'm trading the range, my friend. Yeah, buy, and then the market is just not today. And then, so I can't anticipate the slight correction on the dollar index. And then from there, we can yet again monitor the price action. Next up, we've got Euro USD. Now, Euro USD also ready to move to the downside. Why? Because the market also never corrected itself. What the market did was printed a massive impulse. So after an impulse, you expect a correction to at least 0.382. And if you take your Fibonacci from the low to the high, and you take it from the low of the week to the high of the week, you can see we have a 0.382 pullback that's lining up beautifully with this previous level of resistance that is now acting as a level of support. I don't expect the market to continue lower. As we can see, the market has started to lose that momentum to the upside. Bears started coming in, and it's all about profit taking in the market. You sell low, you wait for it to get to a high price, and you close, and the retail traders coming, okay, we must sell. Yeah, you sell 0.01, and the people are there to take some profits. Now, next up, we have the Nasdaq. You can see the breakdown that I did on the Nasdaq. The market pushed up higher, didn't get to our target level over there. The target was missed by a couple of pips there, about 40 pips there, but the market went as anticipated once again. Now you can see here the Nasdaq 100 just completed an overextended W formation. After an overextended W formation, you normally expect a continuation to the upside. The market also printed a massive impulse. So after an impulse, you expect a correction. Taking our Fibonacci from the low to the high, there is still some more room for the Nasdaq to continue lower. I would also just be careful because the Nasdaq might just go lower and lower there as well. Next up, we have gold. Now, gold, let me just close this. Now, gold here also didn't correct as anticipated. Gold also stole, as we spoke about in the last breakdown. Gold had started the correction. If you remember, I did say that we can expect gold to continue lower, but because gold had now printed structure, we do now have to wait for the clear break below the structural level, because this level is kind of acting as a level of support. And once support gets broken, it becomes resistance. On the retest, we can then start looking for opportunities for the market to move to the downside. Next up, we do have German 30. Once again, also anticipated correctly. We spoke about the market that broke below the strong level of support, came back to test it as resistance, printed and overextended W formation, and we expect a correction over here as well. Now, because the market already started the move to the downside, I would suggest that you wait for a pullback to this level over here. This level over here acted as a level of support. A clear pullback would act as a level of resistance. On the retest, definitely start looking for a selling opportunity to the downside as well. Now, that's it from my side. Thank you for your time. And before I go, I will open up a Telegram group that you can join to keep up to date with the passing of funded accounts and how it works, payments, whatever the case it is, just to answer all of your questions. Cheers for years.